no one entity yet has cracked the I can do all of those things, right? I can give you a toolkit, I can mint, I can structure, and I can arrange, and I can sell. So what we've been working at for the last year is to sit in the middle of those people that do all those components really well. So announcing today the partnership, which we hope is the first step of lots of good activity between us and Adam and Sharif and what they've done.
Hello, you're watching Proactive. I'm joined by Valerium CEO Gary Cottle, as well as Adam Buktila. He's co-founder and chief strategy officer of RWA.io. Gary, Adam, very good to speak with you. I'll start with you, Gary. You talk about RWAs as a bridge between traditional markets and digital infrastructure. What's the single biggest thing that's been missing so far, and how does plugging Valerium into the RWA.io ecosystem actually fix that practice?
Hi, Stephen. Hope you're well. I'll try and explain it in as simpler terms that I could understand it. So, if you imagine the last couple of years, what's been developed, so tokenization has been 4 or 5 years, or still we're still very nascent, early stages. The piece that's developed well, basically, is the technology piece. And I think Adam and Sharif and what they've done, it probably exemplifies just how far you can take technology from traditional finance. So they've done, and they will talk about it in more detail, but they've done invoice factoring, they've done finance, they've done metals, and there are lots of people who really have done. And we built Valerium Markets to focus on effectively the structuring and the issuance side. So I think that piece has probably come along quite well, to the point that people are good at finding deals and issuing deals and minting deals and putting tokens on. And that's effectively that is the bridge between bringing what has been traditional finance for all of those things, gold lending, factoring, stuff like that, asset repoing and things like that. Now, the piece that I think probably the real bridge, and this is why the RWA guys, I think, and what they've done is just absolutely a pivotal piece in the ecosystem going forward, is everyone struggled on the investor side. So on the issuer side, you have your right regulatory landscape, you get your licenses, you make sure it's regulatory compliant, you work out how to document it so it's got a good legal construct with smart contracts and all those other good things. So the piece that the no one entity really has got a cradle to grave. So no one entity yet has cracked the I can do all of those things, right? I can give you a toolkit, I can mint, I can structure, and I can arrange, and I can sell. So what we've been working at for the last year is to sit in the middle of those people that do all those components really well. So announcing today the partnership, which we hope is the first step of lots of good activity between us and Adam and Sharif and what they've done. We think that helps bring that all together further, because what you really want is you want a venue or an ecosystem or a marketplace where effectively you have all the issuers and all the investors able to look at what's being tokenized and to buy it. So again, it's a tiny step forward in what is an incredibly challenging process that traditionally assets were sold to banks and pension funds and maybe institutional investors. Tokenization slices them down to $100 clips or $50 clips. I think Adam, they've done some really interesting stuff in I think it's in emerging markets with people buying fractional gold down into the last $10, $20. I don't know how small it is, but I think for us it's this is yet another bridging it all together, right? And I think what they do, and one of the reasons why we're really keen to work with them and partner with them and whatever that turns into, is because it's another piece of the jigsaw puzzle.
Gary, Valerium is very firmly on the regulated institutional end of the spectrum. How far are you really prepared to go into decentralized territories like DEX's on-chain liquidity without compromising that regulatory credibility?
It's a really good question, but it's also a very difficult question. You trade things away with DEXs. So obviously with self-custody, which is at the cornerstone of those DEXs, that everybody loves that because it's safer. For us, I don't think, and this is one of the things that we were trying to build previously, which when we had the bridge, the DFMI of many moons ago, you've got I don't think we're well placed to build anything. I think there will be companies out there and technology companies that are probably already much, much further along and fully functional. And Adam probably can talk better about that than we can. I think we certainly want to make sure that the world of people having self-custody and doing everything via a wallet, right? That's nirvana. We're not quite there with smart contracts there. So that's probably one of the biggest gaps. Secondary trading, no liquidity. So I think when the market develops over the next couple of years, to add all those things in there to make sure much more technologically secure, sorry, to make sure you've got a proper legal construct around smart contracts, to make sure that when you issue something, you've got liquidity off the back of it and things like that. It's definitely part of the evolutionary process that we'll be involved in. I don't think, again, having run one of those businesses before, we're not going to be in the business of offering um, secondary liquidity anytime soon. We will be working with partners who do, and there are some great firms who are already doing that. And there's one of the two of the acquisitions that we're looking at that already do this. So again, it's something I think we will do in the future, but not directly. It'll be indirectly.
Well, Adam, let's bring you in here. RWA tokenization gets talked about a lot, but adoption is still patchy. From your perspective, what actually makes an issuer or investor say yes? And why does having a regulated venue like Valerium Markets change that decision?
Yeah, thanks, Stephen. And again, great to be here. Let me take it into two parts, right? So the issuers and then the investors. In both cases, people are going to say yes when the risk becomes understood, the technology becomes understood, the product and the issuance and the structuring is all understandable. Like issuers want credibility. They want obviously capital access. That's one of the main reasons why they're bringing these assets on chain. But there's also an element of trust, right? So the in the Bitcoin world and the crypto world, they say don't trust, verify. But in the real world assets kind of tokenization world, well, there is trust, right? You're going to have custodians, you're going to have broker dealers, you're going to have people that are sitting in the middle of these deals. And tokenization alone doesn't solve the problem, right? I say it all the time. You can bring any asset on chain. It doesn't mean it's going to sell. It has to be structured in the correct way. It has to have the regulatory framework surrounding it. And, you know, if we were talking 10 years ago, the technology just wasn't there. It needed to catch up. It's not a technology problem anymore. If we were talking maybe 5, 6 years ago, the regulation needed to catch up, and it's not a regulation problem anymore. It's actually an access problem. We need to give people access to these assets. They need to understand what they are. At RWA.io, what we do is we track the entire industry. So we've got hundreds of projects, over $300 billion worth of assets. So we're kind of able to look at the intent, the assets go out, which ones are selling, which ones aren't. And really, it's a blend. And us ourselves, we've been involved in over $100 million worth of tokenized assets. Some of them have sold really well, some of them haven't. And generally, it's about just the quality of that product. It's about the risk model. Is it understandable? And it generally falls into kind of three categories, right? If you're going to ask somebody to take on additional smart contract risk or maybe use technologies that they don't fully understand yet, but it's got to be a damn good product, and the yield has to be, a lot better than it would be in the traditional markets. And we're not quite there yet. A lot of the times they mirror kind of similar yields you're getting off chain versus on chain. So why are you actually bridging on chain? It actually comes with not just the tokenization, but the additional utilities that you can offer. Can you offer 24-hour day trading? Can you offer lending and borrowing? And it's adding these additional utilities that really makes those investors say yes. I think Gary put it really well. You know, getting the supply side is not really the challenge. As I said, we've hundreds of billions of dollars worth of assets that are there, but how do we get that buy side? And I think it really just comes down to knowledge and people getting access to these products.
Adam, looking ahead to things like collateralization modules and borrowing against tokenized assets, are we talking about incremental evolution here or something that could genuinely reshape how capital markets work?
What do they say? It starts with a trickle and then a flood. So I think with these, you're actually, the genie is kind of out of the bottle, right? So collateralized lending and borrowing in the crypto world has been happening in DeFi markets now for close to a decade, hundreds of billions of dollars per year. in the real world asset kind of tokenization market, it's slower to uptake. You've still got hundreds of millions of dollars worth of volume, but there's kind of a couple of key issues that exist. Number one is pricing. You have to have up-to-date pricing of all of these assets, obviously, to get your effective LTV. Once you've made that loan, you're going to have a liquid secondary market in order to liquidate those assets in the event of a default. So we need to get better pricing oracles, broader access, new structures. So I think it's incremental, especially as the numbers are related to the traditional finance world, right? We're still tiny. However, it's growing. It's growing week on week, and you've got platforms like Morpho, you've got platforms like Aave, even the tooling that we have ourselves. We've done lending and borrowing with gold tokens. We've done them with real estate tokens, and we've kind of learned some of the challenges that exist. With something like gold, it works really well because it's got that global spot price, right? It's got a lot of depth, people understand. And gold, obviously, traditionally is very difficult to fractionalize. So it makes a really kind of compelling case. So I guess, yeah, incremental at first, maybe transformative once the rails are really in place.
Well, gents, I hope you'll keep us posted on progress with this new partnership. Thank you very much for your time today.
Thanks, Stephen.
Thanks, Stephen. Thanks for having us.
You're very welcome. Valerium CEO Gary Cottle and Adam Buktila. He's the co-founder and CSO of RWA.io.